You're watching Mirror 7 News. Stay informed, stay ahead for more news.
The Federal Reserve is preparing to announce its first interest rate cut in 9 months, and this decision comes at a time when the central bank is under enormous political and economic pressure. For months, interest rates have been held steady since last December, even as the job market has started to show signs of weakness. Now, with unemployment ticking higher and job growth slowing, Fed officials are signaling that a rate cut is necessary to provide support for the economy. But what makes today's move especially remarkable is not just the timing, but the environment in which it's happening. President Donald Trump has been relentlessly pushing the Fed to cut rates, and not just a little. He has called for a large, half percentage point cut, arguing that it's needed to supercharge growth. Former Minneapolis Fed President Narayana Kocherlakota even acknowledged that there's an economic case for a big cut. Still, he warned that such a move might look like the Fed is bowing to political pressure, something that could undermine its independence. The Fed's credibility has long rested on its ability to make decisions separate from politics. Yet that independence is being tested. Trump has not only criticized Chair Jerome Powell, but has also attempted to fire him. He has tried to remove Fed Governor Lisa Cook, who remains in her role only because of court rulings blocking her dismissal. Meanwhile, Trump's top economic advisor, Stephen Miran, has just been confirmed to the Fed's Board of Governors, while still keeping ties to the White House. That overlap raises questions about whether Fed decision-making is truly shielded from presidential influence. Markets are bracing for the outcome. Wall Street is betting heavily on a modest quarter-point cut, with only slim odds of a larger move. The stock market has already rallied in anticipation, though investors remain cautious. A small cut could provide psychological reassurance, but it's not clear how much relief it would deliver to ordinary Americans. Mortgage rates, for example, have already fallen in recent weeks in anticipation of Fed action, and analysts warn housing affordability may not improve much further. At the heart of this debate is the Fed's dual mandate: to maintain stable prices and maximize employment. Inflation has not been fully tamed. Consumer prices are still rising at close to 3%, but the weakening labor market is flashing more urgent warning signs. Businesses are pulling back on hiring, and for the first time in nearly 5 years, the economy recently lost jobs in a single month. Economists say the Fed may feel compelled to act, even if the benefits are limited. In short, this is no ordinary Fed meeting. It is unfolding against a backdrop of political fights, legal battles, and economic uncertainty. The decision announced today will not only shape borrowing costs for millions of households and businesses, it will also test the boundaries of the Fed's independence in the Trump era. Stay subscribed for more videos.